Hello, 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 hello. Mic test, mic test, mic test. Hello, 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 hello. Okay, so it looks like at my end the audio is working fine. So, guys, good morning, good evening, good afternoon to you, depending upon the time zones you guys are in. So, my name is Nirav, and welcome to the 54th edition of the Trading Opportunities webinar. Before you guys join the chat, okay, there it is. Hello, Steve. How are you doing? And since the audio and video is working fine, you guys can hear me and see it. Let's now start off. The quick disclaimer on screen suggesting all content presented here is purely for educational purposes. I'm not soliciting buy or sell. If you do go on to use the views presented here for your trading and investing, then you yourselves will be liable for your profit, your loss, or loss of profit. Right. So, let me also check. Okay. Hello, Fraser. That's nice to know. Okay, guys. So now, before we move with the actual webinar, let me just quickly run down the very quick about us part for those of you joining in for the first time, right? So here is the quick introduction. My name is Nirav, and I'm the admin and owner of 50eyes.com website, as well as the 50 Eyes Market Analysis YouTube channel, where this broadcast is currently being run live alongside our LinkedIn page, not actually page, on my LinkedIn profile. Let me reload it. Okay. Yeah. And aside from that, I am also the author of the book Think with the Market Secrets to Achieve 80% plus accuracy using Elliott Waves, which is available on Amazon's Kindle platform. We are currently in the 54th iteration of the Trading Opportunities webinars, which we conduct on every Monday, Wednesday, and Friday, currently at the time of 2 p.m. GMT, right? And most importantly, very recently, we have joined in the join feature. So those of you who like the webinar and its contents and have benefited from it can kindly use the join button and support the YouTube channel. That is the only way to ensure that I continue doing these webinars, right? So if you are someone who has been watching these webinars and finding them of use, do check the membership feature out on YouTube. Okay. And lastly, before we move forward with the webinar, there's the final thing which I always show, my 6 year track record of 80% plus accuracy. The reason I show it is because in this industry, even 60% accuracy is considered high, and I have maintained 80% plus since 2016. So as you can see over here, 2021 82.22, 2020 88.52, 1984.88, 18, 17, so on and so forth. You can check. And the way these accuracies are calculated is that if you pick up any of these spreadsheets, you will find that here is the instrument name, the date when this webinar was conducted, the instruments that were discussed, and the actual link for the YouTube video as well as the website posting. So the things that happened after the discussion, if it worked out, we give it a +1. If not, we give it a -1, like this one, not as expected. So based on that, we will count everything or all the things we have discussed in that year, and 7 out of 61, 54 out of 61 worked out, 7 out of 61 did not move as expected, so 88.52. So on and so forth, these what do you call accuracies are calculated, in case you were wondering. Right? This just goes on to show my level of expertise in the field, and that is the only reason I show it for the new participants to know. As far as the way these webinars are currently considered, this one second, let me just click live. So in these 54 webinars so far, we have been able to catch a total of 62 big moves, right? I'm just talking about till the 52nd webinar. What happened after the 53rd, we will know in today's 54th webinar, right? So in these 52 webinars, we have got 62 big trading opportunities. I'm not talking about the minor movements. I'm talking about big trades. So that's about it for the introduction, guys. Let's now head over to the actual chart discussion. It will proceed like this. We'll go with the chart of Euro USD, followed by EURCAD, USDJPY, USDJPY, crude, gold, S&P, Nifty, and finally Bitcoin. And in case you have any doubts or questions, once I'm done with the chart discussion, you can just post that quickly in the comment section, or sorry, the live chat section. Because if you want to take or ask queries, then you will have to be in the live chat. With that, guys, let's just get started. First of all, we have the chart of Euro USD. Seemingly, I never updated the count. Let me just quickly do a reload. So the thing in Euro USD which we discussed last time was that yeah, no, it's still the same. So let me just show you what I'm saying here by actually updating the counts. Perhaps it was a different chart which I have updated. Maybe I forgot to update altogether. So Euro USD, when we discussed it the last time, our view was that this market is not going for the 1-2 progression or the nested impulse in the downward direction, which we had previously talked about, and which suggested two things. That first, this market is going to go sideways within this range, or that is a move within this range. It can do anything, all sorts of price movements. And second was that it can just take an upward flight, right? And when we did the last webinar, the date and time was Wednesday, 22nd. So on 22nd, we did the last webinar. The price was, let me just give you a rough estimate. The price was somewhere here, right? So basically our view was it's a wait and watch kind of scenario, with the bias being that this market can either remain sideways within this range, within this box. Not sure why it's drawing it as a line. Yeah. So either it can remain sideways within this zone or range or box, or it can go upward, right? So since then, this market has taken an upward flight and it has gone to touch the price level of 1.09287. Few things we can now see are, again, the bias remains the same. It can continue sideways movement or it can go upwards. Now, the ways it can continue the sideways movement also are of importance. Currently, we do not have a clarity, but we have something of value here. If the market is able to go till the price level of 1.09840, then I think it may proceed itself as a possible flat correction. By that, what I mean is, let me draw this on the chart. So by that, what I mean is that if this market is able to proceed to this price level, 0985, 1.0985, then we expect that a possible five-wave impulse in the downward direction is possible, right? And generally, in cases of flat, we do not see a very huge impulse in the downward direction. Generally, it will stop before or near the last low, which is basically 1.05145. So that is the only significant factor here. If the market does not go to this particular level, then it opens itself up for the possibility of a complex correction continuing in the downward direction, in which case, if the market falls, it can go much lower than the last known low, right? Basically, as much low as this price movement. So if I just take a rough estimate, then it is suggesting that the market can go up to 1.04352. Again, keep in mind this is just a rough estimate. As the price action proceeds, we may have more data incoming, and that could suggest that further more downside is possible. Yeah, also, interesting thing, we also have a downside target roughly near the same level of 1.04211. Anyways, long story short, it is still a wait and watch with the level to watch out. I've already marked on the chart. It's already written here. Keep in mind the data feed I'm using and the data feed you are using may be different, and that may result in a little bit difference in the time. Sorry, in the price. Okay, nothing much to add here. Still wait and watch. And of course, short-term intraday positions are possible, but I'm going to avoid discussing that because it is most likely progressing in a complex correction, in which case it goes sort of outside the scope of these webinars to discuss them. Kind of discussion I would keep for the training program LT students. Okay, guys, so let me know if there's any doubts or queries. Otherwise, we'll move over to the chart of EURCAD. If there are no doubts, you can also let me know by confirming that you understood the concepts we discussed right now by typing in clear or understood or something of that sort. Hello, Philip. Kind of missed that comment there. Well, thank you, Steve. Okay, so now the second chart, EURCAD. Again, I'll just hit the refresh once here. So in EURCAD, last time when we discussed this particular chart, I'm not sure why is it not updating. But anyways, let's just continue with what we have on screen. Let me give you the bigger picture outlook for 1 second. So from this point of reference, which is around the price level of 1.2874 something, we have this progression. And the outlook we had was that either the wave Z is continuing in the upward direction or it is already complete when we discussed it the last time, right, which was basically 2 days ago. Right. And the basic idea was that it seemed like the whole 1 second, let me just go to the lower time frame before I discuss anything and point out the actual price level. Otherwise, it won't make much sense as to what we are discussing. 1830, 22nd March. So see, roughly we were somewhere over here in the last discussion, and the idea was that either the wave Z is just about to get completed or it will continue up for more completion. We had already caught long trades here, by the way, near this zone of 1.475. So the idea basically which I discussed in the live webinar was that keep trailing it as long as it's continuing up. And since we are dealing with the wave Z, which is basically a corrective structure in the other direction as a zigzag, there is a possibility that it won't continue for very big price movement, because generally when a market goes extreme upwards or downwards, it's generally as an impulse, not as a corrective structure. So with that idea, we had already caught the longs here. We did not have a proper target. Let me see if we had anything. We had a rough outlook actually 1.49173, which seemingly the market has exactly reversed from. And there seems to be some issue here. I must have updated the counts because I have the price level here, but the analysis does not seem to have gotten updated. Maybe some problem. I need to clear the browser's history and cache. 1 second. So yeah, not only were we able to capture the longs around this level of 1.47619, it was a trail according to your entry kind of situation. So I do not know if you were able to get out at break even or a little bit above. That again depends on your trade and position sizing. trade management and position sizing. But from the perspective of the analysis, this analysis has played out picture perfect. This was the entry, this was the minimum estimated target. It has hit both ends, right? So we will add it as our number of trade which worked out. And if you were able to capture this lag, by the way, do let us know in the comment section or in the live chat section if you are currently live with the current webinar. Right, that takes our tally of a number of trades which have worked so far as 63 in the last 53 webinars. Right, and as far as the current price movement is concerned, I will like to wait and watch, because if this really is a wave Z completed, let me just update it now. Then there should be some clear evidence of a downward movement. The current leg, although it does look like it has some strength, but it still has to prove itself. So we'll wait and watch for it. Only time I'll be interested in something is if it really does take out the high again around 1.49337, then I'll be looking to take some short-term longs. But otherwise, it's a wait and watch. No shorting or selling opportunities for me as of now. So that's about it for our trade on EURCAD. Let's head over to our next chart, USDJPY. And in the meantime, if you guys have any doubts or questions, you can just let me know in the comment section. Thank you, Fraser and Steve. So USDJPY, let's just quickly update this. USDJPY, when we discussed last time, our view was that we expect that this market may continue in the upward direction. And what we were looking for a possible retest of the trend line, because the whole idea of this market going upward started when we saw a break of this trend line, right? The 0 to B trend line. This is the 0 or the point of reference point, starting point of this analysis. And this is the wave B of the expected zigzag movement down. So the idea was that if the market sustains above this channel, then we'll be interested in adding more longs and partial entries of plus one lot. If you generally trade with 10 lot, that is minimalistic entries were already taken, right? But what happened is that the market just went down. It's like clear this was a false break. It is also possible that we need to update the whole count in the coming sessions. But so far, what it looks like is it was a false break, and the wave C has continued its movement to the downward direction, right? So based on that, there is again the setup remains the same. One second, let me just quickly update the scenario for the C down. It actually may not be an ABC down. It may actually be a WXY progression in the downward direction. That would also suggest that this trend line is drawn incorrectly, because then the count changes and the trend lines also change. Right. However, I will have to investigate that further. So instead of updating the whole count as such, I'll just propose a very simple thing here, because it stands to reason that from both price action as well as the counts perspective, as long as the market sustains below the price of 134.81, let's say roughly speaking, or let's say 133, as long as the market sustains below this level, there is not much point in adding any longs on this counter, right? And this channel, as I said, we will have to completely relegate it most likely. So I'll actually delete it. Kind of becomes irrelevant at this point. So long story short, USDJPY did not really move as expected, did not really trigger our strong bullish movement which we were expecting, and didn't even go sideways as per expectation. Instead, it went down. However, the buy still remains the same with the updated price level above 133, as you can see. Let me know if there are doubts or questions on this counter before we proceed with the next chart of Euro JPY. Thank you, Fraser, and thank you, Steve, for the confirmation. Now let's head over to our next discussion and load the chart of EURJPY. I think this is the one. Yes. Let me just hit refresh for once. Again, seemingly the same issue. But anyways, let's just proceed instead of wasting any time. So EURJPY, the index counter, what we discussed last time was that the scenario was a bit unclear. This was the updated view that maybe this is the X, maybe this is the Z. And if the market has to continue, it can go up as a 1, 2, and 3. That was one of the bullish views, but we discussed the bearish view in much detail last time. I remember very clearly. What I'll do is I'll simply just push it on the other chart we have. So this was the actual bearish view which we discussed last time in much detail, which was sort of our main kind of, or let's say hypothesis one outlook. We discussed that it is possible that this market is heading lower and this leg down was the starting of the progression in the downward direction with the current leg down being the leading diagonal. Right? And fast forward to the current price action, it is either the completion of the wave 2 over here or it is possibly continuing sideways, right? So more or less what I'm trying to suggest is that if this is the wave 1, this was the actual count we discussed, then the wave 2 is either complete or continuing, and the trade for selling the market or possible shorting opportunities would come if the market breaks the low. It still hasn't done that, so shorts are yet not triggered, but once or as soon as they get triggered, this is the count we would be following. Could very well just substitute it with an ABC as well, but the simple fact that this market is showing strength in the downward direction is suggestive that let's just consider the scenario as an impulse in the downward direction. So long story short is this is the kind of structure we discussed as our main hypothesis last time. So for whatever reason, it may not be showing, but now we have it updated. Pretty much explains itself, right? Looking for selling opportunities below 138.866 where the stop loss will be placed at the swing high, which is currently placed pegged around at 143.647, right? So the setup remains two hypotheses in our downward direction. The upside hypothesis is getting weaker and weaker, and once we take out the low, then it would have relegated our downside possibilities heading into scenario 3 to 1. For those of you not understanding what I just said, it's not much relevant. But if you want to get into more details on how I take different hypotheses and segregate them, you can check out my book Think with the Markets. I discussed that particular point in much detail over there. But then use that was it for EURJPY. Let me know guys if there is any doubts or questions while I load the chart of WTI's crude oil. So here is the chart for WTI or West Texas Intermediate crude oil on screen. Thank you, Steve and Fraser. Looks like the participation has remained low comparatively to our few other webinars, or most other webinars, I should say. But yes, getting back to the subject matter, we were saying that WTI crude oil last time when we discussed, I updated the scenario, and the only problem I was thinking that might be seen in this market is that this leg has gone a little bit more up than we generally expect it to. In specific, it has gone higher than the wave 4 high, which is currently pegged around 69 point, double bracket wave 4 high, sorry, which is currently around 69.728. And as per Elliott Wave guidelines, generally wave 4s tend to end in the wave 4s of 1 lesser degree, but that's just a guideline. But this guideline is generally respected quite nicely. But the only problem I faced was that it has gone higher, and now it has started to give a downward movement, but it's not again moving very clearly. So, anywho's getting back to the discussion, last time we discussed that 66.205 should be the level. If taken to the downside, I will be again interested in selling. It has not taken that level to the downside, right? So that basically means that we still have not entered or re-entered the shorts, because if you recall, we were short on this leg from its price level around 73.28, and our price target was between 64 to 62 levels. So we are not yet short again, but if we do get entries, then we expect possibly two legs in the downward direction if our count is correct, right? So far it's just a wait and watch, biased bearish, and trigger not triggered. Nothing much to add. Long story short, just keep it in your watch list, and we might get a good trade. Thank you, Jill. And what about the other participants? Let me know if there is any questions or anything while I quickly load the chart of gold. Thank you, Steve and Fraser. How is my analysis not visible here? There's definitely something going on with their server. It has happened with many charts that my analysis is just simply not visible there. Oh, there it is now. Delay as I believe. Hmm. Okay. So there we have it, the chart of gold here on screen. And let's just quickly run down what we discussed in the last webinar and what seems to have transpired thus far on screen. As you can see that last webinar we discussed very clearly that this is the possible reversal level for gold 1932.41, right? And we had also mentioned that if the market sustains below it, then I'll be interested in selling below 1919, right? However, that did not transpire like that. And this has so far worked nicely into what seems like a possible wave for continuation, or maybe the wave for is already complete here. That remains unclear, but not really much of a question here. So so those of you who are following this webinar and know how to apply these concepts should have already gotten some short-term long opportunities. If not, I cannot guide you at every step of the way. We can only do the webinar 3 times in the week after all. So, and that's the scenario thus far, right? But so far, what I can see is that there were many trades here. But what I can discuss is that conservative longs will be above 2008, and anything in the middle we can use to build up a position. So what I'm basically saying, why anything in the middle is that if the market proceeds as a, let's say, a flat correction, wave 4 comes in here, and then this is the fifth. So this is price action within this range between 2008 and the downside level around 1934, roughly speaking. So anything between this level we can look or use it to create swing longs. Conservative, I've already told you what's the upside alert. And as far as upside targets are considered, we have already marked some of them, but I believe they were quite high and they were on the second chart. So it's all messed up here. It's just not loading my accounts for some reason. It's delaying. So anyways, just watch two webinars behind, like 51st or 52nd webinar. I'm very sure we have discussed the upside targets on that one. Right. So this is the expected progression. We expect more upside to come into play for wave 5. And if wave 4 is continuing, then it may remain sideways before going up. Otherwise, it may just shoot up. Right. And now again, we do not have the endpoint for wave 4. So I cannot give you a precise target for the completion of the fifth wave. Other than this wave 1, which I'm pretty sure has already been achieved. Yes. So wave 1 target remains sort of useless here. There are two more methods to project targets, actually 3, 4 more methods. So roughly speaking, 2060 immediate target you can look for. But then again, as I said, these levels are not precise. We do not have the exact location for the end of the fourth. So these projections definitely should not be considered as the most optimal levels. Anyways, at least the direction is clear now compared to our last discussion. And if you know how to trade these things, then the counts are mostly just useful for directions, or more importantly, useful for directions. Let me know, guys, if there's any doubts or queries before we head over to our S&P's discussion. Thank you, Jill, Steve, and Fraser. So in that case, let's first quickly check what's the scenario with S&P. So we were sort of waiting for the important news event. It does look like it does not have the, or it does not seem to have shown the full impact of the event just yet, right? But it does not have to. What statement I made was that generally the events will align themselves in time with the reversals if this is a wave E. So seemingly it has sort of reversed right around there, right? So maybe it's the E, maybe it is not. So we don't really care much for it. After all, we do trace the price action. We do not really trade the fundamental events anyways. So let's just quickly see what's the price action telling us. So from a swing perspective or from a longer time frame perspective, it does look like the whole scenario remains the same, right? It is still possible that this market is heading for a collapse here. Cannot be relegated. Yes, the possibility is still existent. And from a another standpoint, if the market has already given us the complete correction like a down, B up, and C down already, then we can count this as a wave 1 up, 2 down, and 3 up. Again, we do not have the evidence for that either, right? At least the market should take out 4073. That would be a first sign that there is some sort of bullishness incoming. So it hasn't done that either. So we do not have any clarification for that. And there are few things that also this is not a very strong count either. But yes, I will sort of, or I can sort of see how I'll be able to plan some short-term trades along this. If this market is heading for one more character structure downward or an impulsive structure downward, then this may suggest as a possible diagonal in the downward direction, which would suggest that any break of the trend line to the upside and then break of this low would suggest a short-term selling opportunity, right? Unless something changes completely out of the scenario, right? This is a short-term opportunity I'm looking at. But again, as I said, this count is not the most solid count. And from a swing perspective, we do not have much of a clarity. But this is the only short-term scenario I could think of right now, and that's what I have discussed, right? If there's any questions you guys have on this counter, just let me know in the comment section before we head over to Nifty. And yes, I'll just like to quickly bring your attention, guys, again. Although I have said it in the beginning of the webinar, but most people do not watch the whole webinar. Some just come in for segments, and that's why I would like to point it here before we head over to the next chart. That we have recently launched the join button on our YouTube channel. So if you want to see more of these webinars and this with this regularity of 3 webinars in a week, then you will have to understand that these webinars take a lot of time doing the analysis as well as presenting them and distributing them on various channels. Therefore, if you are interested, you should check out the join button, which is basically a sort of membership on the YouTube platform. We are not asking you to join anything privately or do anything out of the ordinary. So that's remains in your hand. I will only watch for the few upcoming webinars. If I see that the participation is there, I will consider continuing with this project. Otherwise, I'm a trader myself, and you know how. I mean, even if you are not trading a big account, you will get the idea how money moves in this business, right? So, sort of depends on you guys if you want to see the project continued. With that, let's now head over to our next chart, Nifty, which will be followed by BTC. Let me first quickly check if this is the one we are currently following. Yep, that's the one. Thank you, Jill and Steve. So, in this discussion of what do you call Nifty, when we discussed it the last time, we were very clear on one thing, and that one thing was that the resistance level around 17,200 level was something we had marked much before when the price action was, I believe, somewhere here. So if I remove all the clutter, what is that really all about? And let me just quickly mark 17,200 for the sake of clarity. So what we had so far was that we were thinking that this was the first leg down, the second leg up, third leg down, and we were saying or under the impression that if this is a wave 4 in the upward direction, then we do not want to see it closing above 17,200 level, right? And our setup was also based around the fact that if the market goes above and sustains above that level, then we will have to consider the long opportunities. Now, so far, what has happened is the market has not closed above it, right? So sustaining is obviously out of the question. One second. So sustaining is out of the question. And what is happening is that the market is progressing seemingly downward for the expected wave 5. So far it is exactly working as expected. And the way to use this kind of analysis is generally to form intraday ideas alongside it. Right. Of course, from a swing perspective, also this is working out because it is heading lower. And from a swing perspective, it will be considered as trade complete below the last known low around 16,830 level. Right. But from an intraday perspective, this has been of exceptional use. As you can already see, the market tried to test it one more time and was met by extremely clear sell-off or impulsive sell-off, I should say. Right. So if you were able to capture this opportunity, if you are following these webinars, you should have gotten the idea of how to play in it, because I also discussed some intraday opportunities possible in that context at that point in time. But long story short is swing perspective, we still expect more downside to follow. Right. Pullbacks are selling opportunities on intraday perspective, and invalidation again still lies above 17,200. We need to see the market sustain above it. At this point, if the market does not break the low and takes out 17,200 with a close, then it's definitely pointing that wave 5 down is not incoming and this market is doing something else. But since for now it is following as per our plan, this is a plus one for us because so far it is moving in our direction. So nothing much to add on this counter, right? Let me know if there is any doubts or queries on this counter before we move over to our last chart of BTC. Thank you, Jill and Steve. So let's quickly check our chart of BTC and what's going on. And thank you, Fraser. So in the last discussion we did on BTC, I already made it very clear that more upside can be seen. We even projected the target for the upside, which was around 29,452. It has actually just touched that level. And one thing I like to point out, actually, let me just quickly update our number of trades that have worked. The tally now goes from 63 to 64 in the last 53 webinars, including the BTC trade. Now, so getting back to our discussion, what I was saying was that when I was preparing for the webinar, I had placed this wave 4 here. And the idea was that it should at least take out the last high of 28,978. And that will be considered as the fifth leg, either complete or continuing. So basically what it was a short-term trading setup to the long side or upside. And I was thinking that I will discuss it near the end of the webinar. But as you can already see, on this time Bitstamp data feed, it has, I could not even get the time to discuss. We have been talking for around 40 something minutes, and this has already done that. It has done the bare minimum and gone above the 28,960 level, so basically achieving our target minimum already. So that basically means that the trade I was about to discuss has already played out, right? And then that also means that a correction might ensue. Again, keep in mind our longer time frame count is suggesting that more upside is possible, but that does not relegate the possibility of short-term bearishness or short-term sideways movement or downward movement, right? So with that count already played out, let me just give you the quick idea of the longer time frame analysis again. So in the longer time frame, we are following this CN color count, or let me just write it again. This is our point of reference, and we are expecting that the market has completed first leg here, second leg here, and this is in progression for the wave 3. It is also possible that the third is complete here, then it gives a correction, and then up leg for wave 5, that would be the case of a diagonal structure. If not, then it's an impulse, and in which case we can expect some downward movement followed by an extreme upward movement. But long story short remains that both cases are suggesting that possible clear downward movement should be corrective, and that means a corrective movement we expect after its completion, a possibility for more upside. So long story short, we wait and watch for long opportunities, and we will observe this pullback. So it's now becoming an interesting instrument, and something to be kept in watch list for upcoming possible trades. Right. With that out of the way, I would say we have discussed all the charts we came here to discuss. If there's any doubts or questions or queries, you can just let me know in the live chat before we end our discussions here. Okay, guys, with that, I'd like to close this webinar, and I'll see you guys in the next one.